Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into corporate filings to find the gems hidden within the jargon. Today we will be looking at the abrdn Palladium ETF Trust's Q3 report. And let me tell you, Palladium prices have been quite the rollercoaster lately. So let's see how this ETF has fared. Before we jump in, if you love getting straightforward financial insights without the fluff, make sure you subscribe, turn on notifications. And hey, we've got a fantastic community growing on Discord, link in the description below, where we break down these reports even further. Alright, we're looking at the abrdn Palladium ETF Trust filing for the quarter ending the 30th of September 2025. Essentially, this is a quick snapshot of how the fund that holds physical Palladium and issues shares based on its value is doing. Think of them as a big vault of Palladium that sells you pieces of it through shares. Let's head straight to the financials because that is where the real story is. First up, the statements of assets and liabilities. We're comparing their standing on the 30th of September 2025 to the 31st of December 2024. The main asset here is their investment in Palladium. You can see the cost of that Palladium significantly increased from about $490 million at the end of 2024 to over $593 million by the 30th of September 2025. This indicates that the price of Palladium itself likely went up, and that bigger Palladium holding translates directly into their net assets. On the 31st of December 2024, the trust had net assets of about $354 million. Fast forward to the 30th of September 2025, and that number has jumped to over $622 million. That is a substantial increase, telling us the value of their Palladium holdings has grown significantly. Interestingly, they also issued more shares, from around 4.2 million shares outstanding at the end of 2024 to over 5.5 million by September 2025. This means more people are buying into the fund, likely because they believe in the rising price of Palladium. Now let's dive into the schedules of investments to see the nitty-gritty. Again, the star of the show is Palladium. On the 30th of September 2025, they held about 503,000 ounces valued at over $622 million. This is up from roughly 389,000 ounces valued at around $354 million at the end of 2024. Moving on to the statements of operations, this is where we see how the fund made or lost money. The biggest expense they list is the sponsor's fee. For the 3 months ending the 30th of September 2025, this fee was about $819,000. Compare that to the same period in 2024, where it was only around $416,000. This makes sense given the increased value of the assets they are managing. This is the big driver of their gains. For the 3 months ending the 30th of September 2025, they saw a massive change in unrealized gain on their Palladium investment of over $46 million. This almost entirely accounts for their gain in net assets for the quarter, which was just under $47.4 million. And on a per share basis, this translated to a healthy increase of $9.30 per S-share for the quarter. Let's look at the statements of changes in net assets to see the flow. We see significant activity in creations, meaning new shares were issued, bringing in over $111 million worth of value in the 3 months ending the 30th of September 2025. This is alongside redemptions where shares were taken back valued at about $52 million. The net effect of these creations and redemptions, along with the gains on Palladium, led to that substantial increase in net assets. Now for the really juicy bits in the financial highlights. Let's look at the net asset value per share. At the beginning of the 3-month period, it was around $103.31. By the end of the period, it had climbed to a very impressive $112.35. That is a total return of 8.75% for just that quarter. Looking at the 9-month period ending the 30th of September 2025, the return is even more staggering at over 35%. This directly reflects the surge in Palladium prices. The notes to the financial statements give us more color. The trust itself is a common law trust formed back in 2009. Its main goal is simple, for the shares to mirror the performance of Palladium prices minus the expenses. Their Palladium is valued based on the LBMA Palladium Price PM, a key benchmark in the industry. This ensures a consistent and generally accepted way to price their holdings. They also break down their assets by fair value hierarchy. Importantly, their Palladium is classified as level 1, meaning its value is based on unadjusted quoted prices in active markets. This is the best kind of valuation as it is directly tied to market prices and involves the least amount of estimation or judgment, which is great news for transparency. It seems like they had no Palladium receivable or payable for creations or redemptions at the 30th of September 2025 or at the end of 2024. This implies that all trades were settled within the period, which simplifies things and avoids potential timing issues. The process of creating and redeeming shares involves authorized participants who are basically large financial institutions. They deal in blocks of shares called baskets, and this is how the fund manages the flow of shares in and out of the market, keeping it aligned with the underlying Palladium holdings. For tax purposes, this trust is a granted trust. This means it doesn't pay income taxes itself. Instead, all the income and expenses flow directly to the shareholders, who then handle their own tax obligations. This is a common structure for commodity ETFs. Looking at the changes in ounces, we can see a clear upward trend in their Palladium holdings throughout 2025, supporting the strong gains we saw earlier. The sponsor's fee is set at an annualized rate of 0.60% of the trust's adjusted daily net asset value. This is how the sponsor gets paid for managing the fund. Even though the fee percentage hasn't changed, the dollar amount has increased significantly due to the higher value of Palladium, which is a good sign for the fund's performance. Now, let's move to the management's discussion and analysis. This section provides management's perspective on the quarter. They highlight that the trust's net asset value increased by a solid 20.73% during the quarter, primarily driven by an increase in the price of Palladium, which rose by nearly 9%. They also mention the creation and redemption activity, showing a net increase in shares outstanding. They explicitly state the NAV per S-share increased by 8.75% for the quarter. While this is good, they note it rose slightly less than the price of Palladium itself, which is expected due to the sponsor's fee. This is a straightforward explanation of how expenses impact returns. Looking at the 9 months of 2025, the NAV increased by a remarkable 75.71%. This substantial growth is again attributed to the surge in Palladium prices, which jumped over 35% in this period, coupled with increased share creations. In terms of liquidity, the trust primarily holds Palladium. They don't have significant cash balances, which is typical for a commodity-backed ETF. Since the sponsor covers most expenses, their liquidity needs are minimal beyond managing the Palladium holdings. They also mention market risk. Since the trust's sole investable asset is Palladium, its performance is directly tied to Palladium prices. They don't engage in foreign currency transactions or derivatives, so the primary risk is the fluctuation of Palladium itself. This section confirms that the management through the sponsor has evaluated their disclosure controls and procedures and found them to be effective as of the reporting date. This is standard procedure for a public company filing. Regarding risks, they state there have been no material changes to the risks previously disclosed. This means any major risks identified in their annual report are still considered relevant. Given the focus on Palladium, market volatility and supply-demand dynamics are likely the primary concerns. Here, they detail the creation and redemption activity. For the 3 months ending the 30th of September 2025, there were 82 baskets created and 38 baskets redeemed. This ongoing creation and redemption process is how the ETF share price stays close to the value of the underlying Palladium. So, what is the big picture here? The abrdn Palladium ETF Trust had a stellar period, largely mirroring the impressive run-up in Palladium prices we've seen in 2025. The fund's net assets and per-share value have grown substantially, reflecting well on its strategy of holding physical Palladium. The creation and redemption mechanism appears to be working efficiently, keeping the ETF's market price aligned with its underlying asset value. The primary risk, as expected, is the volatility of Palladium itself. The fact that their investment is classified as level 1 in the fair value hierarchy adds a layer of confidence in the reported valuations. However, we always need to look beyond the headline gains. While the total return numbers are eye-popping, it is crucial to remember that this is a commodity ETF. Its value is entirely dependent on the unpredictable price of Palladium, which can swing wildly based on global economic and geopolitical factors. The sponsor's fee, while a standard 0.60%, eats into returns, but it is a reasonable cost for active management and administration, especially when the underlying asset is performing this well. The limited expenses, with the sponsor covering most, are a definite positive for investors. In essence, if you believed in Palladium prices going up, this ETF delivered. If you were betting against Palladium, this report would be a cautionary tale. The trust direction seems clear. To be a pure play on Palladium. Its strength lies in this focused approach. Its weakness lies in the inherent commodity risk. For investors looking for exposure to Palladium, this appears to be an effectively managed vehicle. Alright, that is our breakdown of the abrdn Palladium ETF Trust's Q3 report. What is your take on these numbers and what they signal for the company's future? Do you think Palladium has more room to run, or is this a peak? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And don't forget to join our growing community on Discord. Thanks for watching. See you next time on Corporate Decoder.